What's going on, everybody? It's Jeff here. Welcome back to the channel. In this video, I want to talk to you guys about how you can grow your portfolio in any market condition. The reason why I am making this video is because a lot of people have reached out to me who are normal, just buy and hold investors. And as a market is beginning to downturn, it's been sideways lately. Tech sold off starting February 11th. There's been a lot of uncertainty, especially today, as Jerome Powell and Janet Yellen are set to testify in front of the House. And investors naturally pull their money out of the market whenever the Fed speaks because of just uncertainties that lie ahead. And so I really wanted to make this video just to kind of give you a different perspective on how you can grow your portfolio while also giving you a great opportunities in the future as market sell-offs, corrections, bear markets, they're all temporary, all right? So if you're interested in learning more, guys, stick around. You're not gonna wanna miss this. For those of you that are new to the channel, all I ask is that you hit that like button, subscribe to join our family, and if you're interested in joining our private community, it is the first link in the description. We have over 300 members. I currently have my private portfolio over there and go over all my stock picks, including what I'm gonna go over with you guys today. So if you're interested, guys, it's the first link in the description. We'd love to have you. Let's get into the video, guys. First off, let's just take a look at Market Watch right now. It was a bit choppy in the morning, a little bit sideways, and recently, as of about 1:30, we have seen a large sell-off happening. Last month, the tech sector began to really sell off as investors were shifting their investments over into other beaten down stocks, such as your travel and leisure, your entertainment, some of your financials, and so forth, as tech ran really hot ever since March of 2020. But what I really wanted to talk to you guys about was something a little bit different than your natural buy and hold or your day trades and so forth. And so what we're going to talk about in this video, I'm going to go over to our Thinkorswim platform, is going to be called selling put options. Right now, if you ever, I'm sure you've heard of put options before, and I'm sure you buy put options or shorting a stock and so forth. But this is going to be something when you are bullish on a stock. And I'm going to go over exactly why you do this and give you a good example. And we're going to use Palantir for this video. And the reason being is because, one, the price point is very attractive. Okay, one being where it sits, and also just being $23 per share. And also, I am very bullish on this company in the long run. Now, there's two reasons why you would want to be able to sell a put option. The first reason is to be able to get immediate portfolio income. Okay, so as soon as you sell a put option, you collect the premium from the buyer, right? Okay, the second reason you're going to do that is to be able to gain exposure at a very good deal to a stock that you are very bullish on in the long run. All right, now when you sell a put option, you have to be willing to be able to buy the stock at that set price if the buyer decides to exercise that option. So going into it, you have to be willing, because you will be forced to buy the stock at that given price. So let's break this down just a little bit further. All right, so let's take a look over here. And I was already briefly looking at this, guys, and this is why I'm using this as an example, because this is probably something I'm going to do for myself anyways. I was looking at the June 21, and more specifically at the June 18th of 2021, and more specifically the $20 strike price. So you go over, you click sell. It's a single action. You switch this over to put because that's what you are selling. And this would cost you, for 10 contracts, which equals 1,000 shares, it would cost you a price of $1.39. So when you sold this, you would initially get a portfolio income of $1,390, okay? Now, if the price never hits below $20, and the reason why I chose $20 was for a couple reasons. One, it has a low in the last 30 days of just above $20. It's also shown me strong support around that $23 range. Okay, so I don't believe it's going to hit that price. The other reason why I did it is because I feel I would be more than happy to buy the stock at that price, because I see Palantir as a long hold and to be very profitable over the next 3 to 5 years and so forth. Okay, so immediately I'm getting that portfolio income, and if the strike prices never hit, it expires out of the money, and you immediately collect that premium and move on with your investing and trading strategies. However, if it does break below that $20 point and the buyer decides to exercise that option, you will be obligated to buy those 1,000 shares. So there's a couple things to think about when it comes to that. One, you want to be able to have enough cash on hand, cash aside, or else you will potentially get a margin call, which doesn't mean you can't sell off your other shares of other stocks that you own, but you want to be just to keep that in the back of your mind. Also, if it goes down to below that $20 mark, you're not buying it for $20. You would be buying it at this price for $18.59, because you already collected that $1,410 premium. Okay, so this is just another way to where, one, you can add income to your portfolio while also giving you really, really good exposure on a company, okay, that is set, that you believe is going to be bullish in the long run. And Palantir, if you're new and you don't know anything about Palantir, okay, this is a phenomenal company that not only I am bullish about, but many analysts are bullish about over the next 3 to 5 years, especially with the green energy sector and the data integration that they provide for companies. Okay, so this is just another way for you guys to be able to add money to your portfolio while stocks are moving down. Okay, and like I said, in my opinion, this is a win-win. Now, it doesn't always work that way. So let me just jump over to something like Tesla. Now, Tesla, the price of the stock is $665, and these premiums are going to be much more expensive. Okay, so these strike prices, I need to go a little bit higher. So the premiums are going to be much more expensive. So to get into them and say I would be obligated to buy 100 shares of the stock, which is the minimum, because you can only sell the minimum of one contract, which equals 100 shares. That just might be a little bit too much for you or for me or for myself. So if you look at the, let's say, the $560 put option, let me switch this over. The price is $40, which means it would be initially, if you're selling one contract, you would immediately receive $40 for each share for that, which would give you an initial price of $4,000. However, if you are obligated to buy the 100 shares, it might be a little bit too much and out of your portfolio. That's why I try to look at stocks that are at a lower price range, like Palantir, what we went over. But the whole point of this video is not to give you a full breakdown of exactly how to sell put options, how to find put options that are profitable to you. It's just to give you guys a different perspective that there's more than one way to grow your portfolio, rather than just buying stocks that you feel like are going to grow. And when they get beaten down, you could use that leverage and twist it around to be able to sell options, write options, okay, and even just other buying options that cost less capital out of your portfolio that can still grow it over in the long term. So the point of this video, guys, was not only just to give you an example of an option that I will most likely be selling in the very near future, but also just to give you a different perspective when, instead of looking at your portfolio just become bloody red and click refresh on the button hoping for it to go up, when it's going to take some time. The tech sector took a hard sell-off. Tesla sold off almost 35%. And while it did get back $100 from its low, it still has over $235 to get back to that $900 level, which is where it was sitting. Okay, so this gives you just another opportunity to be able to grow that portfolio while you're still holding the same amount of shares. Now, to mention, you guys, just like anything in the stock market, options are very risky. There are certain options that make sense for you, yourself, and for other people, and certain ones that will not. So before you just go blindly into selling, okay, or writing put options, please do some more research, learn about it, whether it's on YouTube. You can take everything what people say with a grain of salt, or also go on to like investopedia.com and research all about it. But it'll at least give you another way to be able to grow your portfolio when the market is selling off. Okay, so that's it for this video, guys. I hope I earned your thumbs up, and if you're interested in joining our private community, it's the first link in the description. I'll see you in the next one.